The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
All right, looking good, Billy Ray, feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, on this lovely rainy day. Let's take a look here at the German DAX. As you can see, we've been in a downtrend here since, well, quite a while, but we had a little bit of a rally that ended on November 2nd. We've had the lower tops. What's interesting about this is you can see today's action is sharply down with wide bars. That usually means it's going to extend. Not always, but usually. It's just a first indication. That's really, what we're watching here. Now let's take a look here at the FTSE. You'll notice here we've got a chance here in the FTSE, but it's slipping away, I believe, because the news came out, of course, that Brexit was in trouble. And actually the market rallied at first. We went up and took out the highs of Friday, and then of course it reversed, so that higher high up there is probably in doubt, and we're most probably looking at something a little bit lower. I'll go into the stock market stuff just a little bit later, but I wanted to go down memory lane here just a little bit for two reasons. One is how these markets respond to news. Let's go back to Desert Storm back in 1991. This was a very, very interesting day for me. It was a Thursday. It was January the 17th, and as you can see here on the long-term weekly chart of crude oil, there was a big ABCD up there at $41 a barrel. And if you had been following it on a 15-minute chart, you would have been able to see that there was a little three-drive pattern up there, so the amount of risk was really small. The new moon had been on the 16th of January, and if you followed anything about General Norman Schwarzkopf, you knew that when he was at West Point, his favorite book that he kept on his desk was The Art of War by Sun Tzu. And Sun Tzu said, "Attack in the darkness of the moon." And also Bobby Knight, that was one of his favorite books. It's actually a great book on strategy. But anyway, so I was short crude oil at I believe 41.20. So it was just a tad above 41, and also I wanted to show you one other thing that I was doing at that time because they were all quite interesting. Remember, we didn't have stock indices traded overnight and stuff. This was 1991, and if you notice here on January 17th. On the weekly chart, we were making a perfect 61% retracement down there in the Dow Jones. It was the same pattern in the S&P 500, but we were right there. The next day, of course, the market was up 8%, which was one of the larger moves that the market had up until that time. The other one that I wanted to bring to your attention, of course, was the gold market, because I had three positions on, and I'll get the gold chart up here. This is a weekly chart in gold, and as you can see, we had lower tops from 1990. We had just completed a Gartley pattern at $400 a barrel, right around $404 an ounce. Perfect ABCD right at the 78% retracement, and that was all done during the day, and this was at 2:30 in the afternoon, and I had to get my hair cut at 4 o'clock. So what I did was I went into San Luis Obispo, to where I usually get my hair cut, and at 4 o'clock, it was about 5 after 4, the phone rang at the place, and it was my daughter, and she said, "Dad," she said, "you still have those three positions on?" She'd been working with me that day in Pismo Beach, and I said, "Yeah." She said, "Oh, Dad," she said, "you're in big trouble." And I said, "Why?" She said, "Turn on the TV." So I hung up and I turned on the TV there at the barber shop. I changed the channel, I guess. And there was downtown Baghdad. It was midnight, 4 o'clock. California time was midnight Baghdad, and it was lit up like 4th of July. I mean, it was just going crazy. So I finished the haircut. I quickly went back to the office in Pismo Beach, and I called New York, and the line was busy. And I kept calling New York every 2 or 3 minutes, and I kept calling and calling, and I called Hong Kong to see what was going on over there because I had friends, and the Hong Kong market was basically, not doing too much. It was up a little bit, so there was no craziness out there. They didn't have a price in gold, and they didn't have a price in the crude oil. So I kept calling and calling, and it was about, it must have been about 9 o'clock at night, about 5 hours after all this happened. I finally got through to the guy I usually talk to back there, and I said, "Marty, what is going on?" And he said, "Oh, Larry," he said, "you won't believe it." He said, "This is the craziest stuff I've ever seen in my whole life." I said, "Oh God." I said, "All right, give me crude oil first." He said, "There is no crude oil." I says, "Oh my God." I says, "What's it trading at?" He says, "It's not trading." I said, "Oh Jesus." I'm figuring, well, maybe it's $50-$60 a barrel. And I said, "What do you mean?" He said, "There's no bids, Larry." He said, "There's no bids at 36. There's no bids at 35. We don't know where it is." And anyway, that morning, crude oil dropped the most it's ever dropped in any one day. It dropped from 41 down to $30 a barrel. That's where I made my critical mistake. It was the most I've ever made on one contract. I did that twice, but I covered it, and it went from 41 all the way down to 11, later on in 1993 or something, whatever it was. The other one, gold, was limit down. It was down $25 an ounce. And stocks, they didn't know where stocks were because there were no trading in stocks, but the stocks opened sharply higher. And as I mentioned, I believe the Dow was up some ungodly amount from that level. It was up 200 or something like that, and the S&P was up a huge amount. So it ended up being a really good day. I bring this to your attention for 2 reasons. One is the news doesn't always make the markets go up. Sometimes it's all over by the time you get the news. I've seen this more and more in my years of doing this than I even hate to count. But follow the patterns. They don't always work, but sometimes they do, and that's the real key to thing. It gives you the probability and the possibility. It doesn't give you the certainty. The certainty doesn't exist in our business. Trading involves losses. They're just like breathing. You've got to take it, and you've got to be able to remember that. But those were pretty good times of looking at some of these things. David White, right on top of the game. September 22nd, 2008 was the singles biggest up day in crude. More than $11. Oh, I don't know what the up day is. I know the largest down day was $11, but I don't know what the biggest up day in crude was that time. What was it, David? $16 a barrel? Shut the front door and raise the rent. Wow, I don't even remember that one. Wow, that's pretty big. Was that before was that when it was at trading at 144? Because I know when it got to 144, that's when Okay, that was on its way to the high. Yes, okay, because the market topped in October of that year, so September, and then October 7th, I believe, was the top. Very good. Okay, there you go. All right, let's move on to talk a little bit about the euro, folks. Remember the key level in the euro. If you all wrote it down, it was 1.13, and we went through that like Grant took Richmond. We'll cover that when we get right back. Hold on, 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and I was going to talk. I feel old too, Maria, so don't feel like you're the Lone Ranger or Tonto on this one. Let's move on and take a look at that euro. You notice how we broke below that 113 level? I send these out in the middle of the night or whenever they're occurring. This one was happening at around midnight New York time, because that's when London was starting to wake up around 5 o'clock in the morning, and they were getting news that the Brexit thing was going to be in trouble. And of course, the British pound started to get hit pretty hard, and it took the euro down through it. But the real key here is once it went through 113, folks, it didn't have an uptick. It was straight down 60 pips all the way down to the target that it made at 112.40. We've rallied about 35 pips from that level in small ABCD format, and it looks like the second target will be reached sometime soon. This is a big thing, I believe, a much longer term thing that we're looking at, because if you remember, and I've talked about this many times, we have now broken below the key support here in the euro on the long-term weekly basis, folks. You can see 112.40 was the low. We're substantially below, the breakout low at 113.10. Now that's the ABCD structure that we're looking at, and that takes you down to 106. It's not going to make 106 today, but that's the long-term target on it. Now, if you get back to the 113 level, that should be resistance. But if it gets back above 113, then it could just be a fake out. But right now, it certainly doesn't look that way. Remember that the weakness in the euro The weakness in the euro is strength in the U.S. dollar. And if you take a look at this U.S. dollar chart that we've been posting here for, well, quite a few weeks in here, we had a 382 retracement down there at 93, and we went through 97 like it didn't exist. And you can see the next level is right up around 101, and that would bring the euro down at least another 4 or 5 points if it gets there. The British pound has been, and that also brings in the weakness in the gold. You're absolutely correct. You know, the key in the gold, if you'll take a look at it from Friday, we warned about this, of course, in the newsletter, and then also in the video that we put out on Sunday, that there was looked like it was going to break down and possibly test that 61% retracement down at that 1200 level. We've been to about 1204, I believe, and so it's not very far away. Anything below that 1195 level is going to be extremely negative to the gold. The negativity in the gold, folks, is based on the move between August and October. That 6-week period where you made a perfect A, B, C, D pattern that happened to be at the exact 382 of the high that we made back at 1396. That is just an incredibly bearish pattern, and we're seeing it in silver as it breaks below. You know, it's getting ready to break. Looks like it's ready to break below the the $14 per ounce level. We're still about 8 or 9 cents away. So that's the main thing. So keep an eye on that currency, because that's a really big indicator of some of these things. And if we look at the British pound, which has been bearish all along, you can see here that, you know, all the targets were heading lower in the British pound. We had that beautiful 1-3-5 pattern. You know, had each one of those rallies between 1 and 3 and 3 and 5. Believe it or not, boys and girls, were exactly 0.786, just like it was between July and September. So that made like a natural trend line down, and now you're down, you're 128 and change this morning, so you're down 5 handles. Wait, 28? No, you're down 3.5 handles from the high that was made back on November 5th, and the target. You can see there's a double target there at 124.80. So if the Brexit thing, you know, falls apart or whatever happens to it, you could be looking at that, you know, without too much support. Thanks, Mr. Z, for the support there in the gold. That's exactly right. That 1194, 1192 is, to me, the one that really is the big one, because if we don't hold that, that tells us that ABCD structure is certainly working, and it looks like it's going to be going lower. Remember, folks, I was extremely bullish gold back at the 1160 area. It rallied quite a bit. We were fortunate enough to get out of it at the 1242 level and actually went short at that spot. And now what we're looking at is a possibility that if it breaks, you know, it's got a huge move possibly looking at it, but that's the main thing. All right, let's go through some of the questions that we had here. One is in Boeing Airlines. One of our friends from up in the Washington area wanted to take a look at Boeing, and if you'll notice here, Boeing made a big 3 drive to a top pattern up there at that 392 level, dropped $70 a share, right down to the exact 78% level, and then rallied up just a little above the 61% retracement, and it looks like it's getting ready to take another trip south, but you know, we'll have to wait and see. Anything above 381 in the Boeing would probably mean that it gets down just a little bit, I imagine, with the rest of it. So we'll see if that's going to mean very much. But that's one that looks, it's been a pretty good stock market. I mean, compared to the FANG stocks that look like dog do, I mean, that's you know, some of these FANG stocks are just absolutely look terrible. You know, Apple being one of the big ones doesn't look that great, boys and girls. So let's just put Apple up here and take a quick look at it so you can see that it doesn't look nearly as good as the leader of the pack like it used to. I don't know where the next move's coming, but the key to this is that after it made its bottom there on November the 5th, all it could rally was just about $11 a share. I mean, that was really, and then it gave most of that back. So this is not acting like a really bullish stock like it had been, you know, for quite some time. So just watch that. That could be one of you. Watch all of those FANG stocks. They all look pretty good. Now, Facebook, that's got a chance to, oh dear, I put the Facebook in and I'll be darned if I didn't. Ah, there it is. Hold on. I got it right here. Hold on a second. Here's Facebook. It's held up so far, but still, if you'll remember, Facebook still has an outstanding target down there at 135. That's about $9, from where we are right now. Folks, when I did this newsletter over the weekend and I looked at all these charts and I looked at all these stocks, I was actually quivering because I haven't seen anything this bearish since October of 2008, after the big move from August 15th up into October 7th. And then the market rolled over. This is really serious what I see going on in the stock market. If I'm right, I think we're going to go down really hard. Should we get below 2,600 this week? I know it's a long way from where we are in the S&P. That would really trigger a potential move to 1,900. I know that sounds impossible, but it could happen. And the reason why is there's a lot of complacency out there. And when the market rallies up, we lose, there's more new lows than new highs. Yeah, that's not a very good sign. So pay attention to your equity. Make sure that you protect yourself, because you can buy this stuff a whole lot cheaper. And that's the key to what we're looking at. Here's another one that looks really weak. Take a look here at the Goog. Oh, boy.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at this yen dollar, and if you'll notice here, this is from the newsletter. This level of 114.20 is really, really important. That was the high overnight. Right now we're trading just a tad below that, maybe 25 pips below it. But if we can get above that 114.20, it's got a chance for some more move to the upside. So this is a really critical level here in this dollar yen. And if you go back and look during 2017, how many times we've been up near that 114 and change level, it certainly must mean something economically. What, I don't know, because I'm a technician. I don't know anything about the fundamentals of that. So anyway, let's just watch it, because above that 114.20 level, that would tell us that we'd be looking at something higher. I think I got the arrow in the wrong spot. It should be to the left instead of to the right. But anyway, that's if it gets above that, that would be what I would think be bullish. But right now we're trading below that by about 30, 35 pips right now to take a look at it. So we've got the euro, the pound, the yen, all of them moving pretty good. The Canadian dollar is one that we really liked a great deal. Unfortunately, it didn't quite reach our price objective. Here's one, folks. I don't know if you follow patterns at all, but here's one. This is Canadian dollar on a 4-hour chart going over the last 5 months. You'll notice that price up there at 132.50, that is there's 3 ABCD patterns completing at that level. There are 3 ratios completing at 132.50. Boy, that is mother God and country stuff, folks. That if you can't do that trade, you can't trade pattern recognition, because that's everything you could ask for. I can't remember seeing 6 things happening at one time. So we did get to 132.36, but we missed it by about 15 pips. So in our vernacular, that is a miss. So we have to wait, see if it's going to get there, which it could. It's still trading at 132.10 right now, but the number to look at is 132.50. The good part about that is anything above 132.80. So you're risking about $300, even less if you like, but I would say $300. You would have a very, very low risk entry spot. And not only that, but the market is in a long-term downtrend. All you're doing is completing some patterns and ratios at a lower level from where you were, back in the summertime. So those are, some of the things that you want to keep in mind. Let me take a quick look at what's going on in the markets this morning. I wanted to see how we're reacting. The stock market's not acting good, folks. The Dow was up over 140 points overnight. The S&P was up 20 handles. It gave it all back plus some. That, in fact, is not a very good sign, to keep in mind. That's good. And then when you talk about crude oil, they're saying about the tremendous bullish news in crude oil and how it's exploding to the upside. I think we're up 60 cents on the day, maybe 70 cents. And when you stop and think, it was down 10 days in a row, which it had never done before. But we are at some major support, and we are certainly oversold in the crude oil. But whether the market is going to continue it downside, we'll need to wait and see if that's it. But we're trading around 27.69 here in the S&P. The old low last week was 27.65. Below that, there's an ABCD structure now set up at 27.45. And like I mentioned, anything below the 2600 level sets up a tremendous move to the downside, which I'm concerned that it might happen, but I'm expecting it to happen. So, and it doesn't mean a whole lot. It just means a great buying opportunity and some more great swings. But the pattern is there. I don't know what would make it do it, but that's neither here nor there. So let's keep an eye on that one. And since we're talking about money and stuff, let's take a quick look here at the Treasury bonds. This is one that if you like bear markets, folks, we'll get one here pretty soon. You'll see. I'm gonna draw the pattern in to make it a little easier for all of us to take a look at. We'll just get it ready here. There's your A, B, C, D. That didn't draw it right. Hold on. The thing was a little too sensitive here. Let's just get it ready here. There we go. We'll get it up here. Here we go. We'll get this, and you'll see the look at Treasury bonds today here, because they might get up to this 138.24. They're only 9 handles away. So if you get up there, you're in a bear market, and you're completing the same type of rally that you have between the 17th and the 25th, just like we did in the euro when it went up to that 115 and change when we were on the air last week. It did exactly the same move. So it's repeating over and over again, and that's what pattern recognition and probability is about. It's repetition and the same harmony that you see, over and over again. So keep an eye on these Treasury bonds. They're very weak. They're rallying today. I don't think you can call this a flight to quality, because if it is, it's one of the poorest ones we've seen in quite some time. So that's what we're watching here as we see this. Now we're coming down. We just broke about 12 handles here in the S&P. We're starting to weaken up here a little bit. Let me just, one of our friends here in Las Vegas sent us a great chart. I wanted to show you. This is the chart of let's get this up here, of Goldman Sachs, and this is a daily chart. And you notice the big move down from the opening price up there, where that big big red bar was, and then how it dropped, and then you can see the closing volume on Goldman Sachs. Well, if you look at this, you don't see a whole lot of patterns. But folks, if you studied this, if you spent some time to really look at the chart and pulled up Goldman Sachs, you're going to see, if you did just a 4-minute chart, and I use 4-minute charts because the market, the Earth rotates 1 degree every 4 minutes, and so I don't know if it means, I don't think it's any difference between 2, 4, or 5, but I use that because of that. From my good teacher, Dr. Ruth Miller, who's still around with us at age 95, but unfortunately she's around but not with us. You'll notice here, after that open that we had up there at 234, you had your first little Gartley pattern. About half an hour later, you had another Gartley pattern. You can see that one where the ABCDs measure. And then if you'll notice, on the way down, the market would go flat to rally a little bit for 25 minutes each time. So if you're going to be, trading these things aggressively, and this is what this is about, is aggressive trading, fast moving markets, which, are strong trending. You want to watch for those types of things, because they do repeat. Why, I don't know. But, they repeat over and over again. I could show, well, I'm going to show you one of these days. I'm going to do a webinar about it, but you'll just be able to see the amazing phenomenon. Now, it doesn't do the same thing every day, but it does almost the same thing. What you have to do is determine where you are when that first move occurs, because it's going to repeat again, just like God made little green apples. That's absolutely the case. So keep an eye on that. That's a good way to learn how markets operate, and also how the things actually move in real time. So keep that in mind. So, but anyway, we started out a little weak today. We're getting down to those old lows that we made the other day. So that's going to be an interesting one, to pay attention to. So we'll take a break here. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322.
Call us today.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I posted the chart for the E-mini S&P. I did it on a 15-minute format so we could see the move overnight and then also the move from Friday. You'll notice that those big dark black lines that you see, those corrections, each one of those is basically, they are 15 points, 3 times the harmonic number of 5.5. And then you notice on the last one, when it broke below those support levels at 15, we started to go down, and that sets up the possibility of that number that we talked about just a little bit earlier is Apple down 4%. Okay, thank you, David. I appreciate that. And you'll notice here that we have a ABCD structure taking us down to 2750, which is basically 14 handles, you know, from where we are right now. Whether that will continue to move in that direction, you know, I'm not sure, but, you know, no one's sure. It's just this is where it's looking. The fact that you've got this big wide range in the first bar here this morning between 2777, 15 points down, it's got to stop right about here at 2762.63. Otherwise, we're heading down to that 2750, you know, without too much trouble. Well, there's always a lot of trouble, but that's what I'm watching this morning to see if it's going to, to continue moving in that direction. We'll have to wait and see. The euro, we're trading at 112.70. We had a high of 112.77 this morning, a low of 112.40. So we're in that really tight range, not going on, too much at all. So pay close attention to it. Folks, the one that interests you for a really low-risk trade today, if you're looking at something to trade in the direction of the trend with a low risk, keep an eye on those Treasury bonds, the Christmas bonds, 138.24. You only have to risk about 8 pips on that. That's $250 on a contract that's well over 138,000. So, and the profit objective on it would be at least 4 times that. So that's a good risk-reward level, and it's a double ABCD at a 61% retracement in a very strong trending down market if you like trading in the direction of the trend. And, of course, the trend is, what is that time frame you're looking at? But on this time frame, we're watching an hourly chart on the bonds. It is certainly in a downtrend. So pay close attention to it because it's going to be very, very interesting to see this unfold before we get to some of these levels here. All right, now we had another question about one of the FANG stocks. If you'll give me a second, I'll bring it up and we'll chat about it here a little bit, and that is this Amazon, which has been, you know, probably one of the greatest stocks of all time. At least it has been for Jeff Bezos. And you'll notice here we had since the bottom we made on October the 30th for Amazon, which was right at the 78% level of the low from April, and then we rallied quite a bit. We rallied $240 a share up to the 50% level. It was an exact 50% retracement from the high that we made back in October. Then we gapped down, so we're down about 80 points from the high. That's another reason why some of these charts look so very, very bearish, folks. I mean, they really have. I mean, they just have a lot of bearishness. That's all there is to it. Hey, trust me, don't trust me. Don't trust anybody. But anyway, you know, verify. Trust but verify. I think that's what the word is. But these charts just look flat out bearish. And of course, the one that we talked about, of course, on Wednesday or Thursday of last week is when the S&P went up to the 2818 level, the exact 61% retracement. Hit it 2 days in a row, the 5th and the 6th, and now we're heading down quite a bit. Oh, we got a caller from Oregon. Kim, are you there?
Yeah, I'm here, Larry. How are you doing?
I'm good, my friend. How is it up there? Cold?
It's getting there, but it's been pretty mild and really good weather so far.
Good. What can I do for you, my friend?
Yeah, you had a caller about, I don't know, sometime early October, I think it was, that he talked about having a 100-year chart or something on with Venus retrograde aspects, and he was looking for a top right around October 4th or 5th, with a low projected when Venus goes into conjunct Sun. I think he said October 26th. So that's pretty close call, and he's talked about calling back in. Did he ever call back in, or do you remember that call?
No, he has not. I believe it was Tim Boss, but I'm not sure. I don't think it was Bill Meridian, who should be our guest later this week, but I believe it was Tim Boss. You know, fortunately, I'm very lucky. Go ahead. Excuse me, Kim. Go ahead.
Oh, I didn't think it was one of your professional commentator guest. I thought it was just a caller. So you think it was Tim Boss?
Oh, really? You know what? You know, that could be. I'm trying to think who it was. I mean, if somebody called and gave me that information, it was somebody that I knew that I studied that Venus stuff, Venus-Uranus, quite a bit. But my mind, you know, I just can't remember now. Tim, I'll try to shake up the gray matter later today if I can, and we'll see if we can. If I can remember who it was. Any help you guys can give me here in the room, I'd appreciate it, because it's also pretty good. So we'll see. Did the guy say anything about gold?
I'm pretty sure it was just a caller. But anyway, do you have any applications or programs that you recommend for astro timing? I've been in the markets for a long time, but I really never got into studying astro timing so much. Though I know it's highly effective at some, you know, like everything else. Sometimes it works really well.
Yeah, that's like everything else. You're right.
That you recommend?
Yes, there's one I highly recommend. It's Alfie Lavoie. That's Air Software, AIR, Air Software out of Connecticut. And believe me, Alfie is one of the premier guys in astrology in our business. And he and Bill Meridian built this program. It's got everything that you could possibly want to study astrology with. I mean, it's really good stuff, and it's not very expensive considering all the things that are in there. It's really the best. In fact, there's nothing comparable. I think it's called the Titanium program, and you know, it's really inexpensive considering all the stuff you can do with it, all kinds of testing. It's what Bill Meridian uses with his programs when he comes on the air. So it's very, very good, but it's terrific. It's really really good.
Well, I appreciate that. Yeah.
Hold it.
Look at your archives on YouTube.
Hey, stop.
If I can find that episode, I'll send you the link with the guy that called in about that, because I was curious
Yeah, stay with me here. Hold on here. Someone's asking a question. You called in when the S&P was at in 2011, and do you remember that? Because Mr. Z's got a memory like 26 elephants, and he said you called in back in 2011 when the gold was at 1920. Do you remember that?
Oh yeah. I had some
good. Hey, that's awesome.
That told me the market was
Shut the front door and hey, I like to come down and visit me. It's nice and warm down here. What do you think? What do you think of the gold in here, Kim? You have any idea?
Where the gold is?
Yeah, what you're feeling about gold?
Well, I've been basically short the entire time with a couple intervening bounces. My timing on gold is probably my best thing I do, but it's still nothing.
Hey, can you stay with us till after the break, please?
Really around January.
Yeah. Okay, stay with us, my friend, please.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, do we still have Kim from Oregon on the line?
Oh, yeah, I'm still here.
Hey, good. Hey, do me a favor. Drop me an email, larrypesavento@gmail.com. And I wanted to chat with you just a little bit more about the program and stuff. So if you do that, I appreciate you calling in. And the fact that Mr. Z could remember that from 8 years ago that you called in at that price of 19.20. It just absolutely blew me away that that he remembered that. So I appreciate it. But make sure you drop me an email if you would, Kim. Okay, where are you in Oregon, by the way?
I'm in Salem, right in the capital city here.
Okay. All right. Well, listen, thanks for calling in, and we really appreciate it. And we'll keep an eye on the gold, and we'll be watching some of these things, especially in the stock market. So thanks a lot for calling in. It really helps us a lot. And I like the astrology part. Don't know a lot about it sometimes, but with people like you and Shane Smolian and other folks, I get a little bit here and there that gives you some ideas. I rely on the new moons and full moons so much. So, but thanks for calling in, Kim. We really appreciate it.
Okay, we'll talk to you later, Larry. Thanks.
You bet. Okay, folks, we're down above the 2760 in the S&P. We're trading 2759. We're looking at possibly 2750 as that ABCD structure in that area. We're not too far away from that 1.618 expansion in the bonds that we're looking at, which is also a 61% retracement at 138.24. So keep a close eye on that one. That's one that looks like it could be pretty good. Gold is breaking down below what we think is key support. If we get below that 1197 level in the gold, that is going to be just really nasty, I believe. If you just look at that silver chart, folks, it doesn't have any friends. I don't know if it's due to the fundamentals or whatever it is, but boy, it's just it just looks like a cat that doesn't want to even get out and walk, let alone bounce. So those are the ones that we're sort of keeping an eye on here. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.